A little something about Raymond. He's an investor in stocks and rentals. He wants no money from you, no bait and switch, nothing. Here's what he's going to do. He's going to log into his personal account, share real estate property documents, and give you suggestions on what to read.
All right, this is my Fidelity account, and this is where my retirement accounts are. So I have two 401ks. I have one from GE and I have one for GM. So let's log in. All right. They got it extra secure. And I like that. All right. Actually, it's a little bit more here than what I want to talk about. So I have a total portfolio of 445,000. And let me point out today's date. Today is June 25th. It's about 1:42 p.m. And this is separate from what I want to talk about because this is not an investment account. This is just an account. So my two accounts will be GE, which is here. So this 401k is 382,000, and then this one here is a General Motors 401k, and it has close to 60,000. So let's take a look at the GE 401k. And the stock market is not doing too well, so I'm not doing too well. So let's look at year to date. So I'm down almost 15% year to date, and this is my total balance, 382,000 in GE, right here, GE. So let's look at the investments. So we'll click there. And here are all the investments that GE offers. So the ones with the check are the ones I'm invested in. So it's a total of 5. And I am not doing good. So let's go up here and click here. And this is going to tell us my year to date. So I have a money market account. And year to date, 0.4% interest or profit. Here I'm down, so large cap index fund, I'm down almost 5%. Non-US equity index, so this is foreign stocks, I'm down 11%. Mid cap, so this is medium-sized companies, this is an index fund, US companies, I'm down about 15%. And small cap, these are small cap companies, I am down a little over 16%. So I'm down a total of negative 1478. Not doing well. So if we scroll down, here are all the investments that I can choose from. So these are target date retirement funds. So the way this works is if you plan to retire in 2025 and you trust this fund, you can put all your money in this fund and it's supposed to take care of you in 2025 when you need your money. Hopefully you made a profit, you can grab it out. The larger numbers, these are dates, so 2055. If you think you're not going to need your money into 2055, you can put all your money here or some of your money here. and hopefully you do well. And when you get to that date, I guess you're probably in your 60s, you're ready to retire, and you have a nice nest egg. Um, I never, I've never invested in any of these funds. I like to stay up here and pretty much deal with the anything that has the word index. And the reason I like those is, let's look at fees. And this is called gross expense ratio. The key here, the smaller the number, the less that they take out of your account as fees. So if you can look what I like to invest in, that's really important for me to have a small gross expense ratio. So if I wanted to invest in GE stock, it's 0. But I'm actually invested here. It's 0.03 here, 0.01, 0.01, 0.01, and I'm here, 0. So they're not charging me any fees here, 0, and they're charging me very little here. And let's look which one has the highest gross expense ratio. It looks like this one. So if I wanted to invest in this stock, this is a very high expense ratio compared to the others. So they would take more fees out of my investment. And over the long run, that adds up. So let's say I was invested for 10 years with these low numbers. Um, in 10 years, I might pay maybe $100 in fees. With this high number, in 10 years, I would be anywhere between 1,800 and maybe 2,500 if I had $10,000 invested. So the example is you have $10,000 for 10 years. In this one, they would take probably about $2,000 in fees out. In this one, the ones I'm in, 10 years, $10,000, they would take out maybe $100 in 10 years.